We will get started. Welcome, everyone. So today we're pleased to have several guests with us, but first I'd really like to introduce to everyone School Choice Wisconsin's newest staff member, Nick Kelly. Nick, you want to turn your video on and tell us a little bit about yourself and what are you going to be doing for SCW?
Sure. Hello, everybody. Just want to take a little time to introduce myself to you. My name is Nicholas Kelly. I'm new director of strategic development here at School Choice Wisconsin. In my new role, I'm going to be working with partner schools, school leaders, and other organizations to manage the member services department. I will also act as a liaison between the government affairs team, marketing communication teams, and operations team to effectively plan and manage schools' successful experience with the School Choice branded member services. Prior to joining the School Choice team, I had worked in private schools for 13 years, the last 6 years in which I was the principal at St. Thomas More High School, in which I worked diligently to develop great relationships with faculty, staff, and parents and the community. And hopefully I will be able to use those experiences to help and aid many of our School Choice schools be successful in the future as well.
Excellent. Thanks, Nick. And Lydia, do you want to introduce yourself?
Hi, I'm Lydia. I've been working with Carol here since January, and I just help her with all of her operations work. And today I'll be helping monitor the chat for everyone. So if you have questions, we'll try to bring them to one of our auditors so that they can answer those.
Awesome. Thank you so much. Okay, now on to our guests, Lori, Jason, and Paul. Could you please each introduce yourselves and just say a little bit about yourself and your organization? Lori, do you want to start?
Sure. Thank you, Carol. I'm Lori Sacker. I'm the Chief Financial Officer at Mesmer Catholic Schools. I've been here about 5.5 years, and prior to that, I spent 17 years as an auditor of Choice Schools.
Excellent. Jason, you want to go next?
Hi, I'm Jason Rossi. I'm a partner with Riley, Penner & Benton. I've been working, this will be my 22nd summer working with Choice Schools. And currently we work with over 80 Choice Schools.
Excellent. All right. And Paul, last but not least, please introduce yourself.
Hello, Paul Helmers. I'm from Whipley. I'm a senior accountant there. I've been with Whipley for, I think, 16 years now. We've been auditing Choice Schools. I've been auditing Choice Schools by all 16 years I've been with Whipley. So I think our firm audits, off the top of my head, maybe 40, I want to say, roughly Choice Schools. So all throughout the state. I'm glad to be here.
Excellent. Well, we really thank you in advance for your time and preparation and willingness to just share your expertise with us. I know this is a hot topic and we have a lot of folks on the call, and I expect there to be a lot of questions rolling in. Prior to jumping into those specific questions, we're going to give you a little bit of a framework here, a little foundation, and then we'll move on into the more specific questions that have been given to us and that you will be feeding to us live today. So let's lay a little groundwork here. As you know, the federal government has developed a number of new funding opportunities as a result of the pandemic this past year. We just want to make sure we're all on the same page with the right understanding of these verbiage and acronyms before we get started. So I've just pulled together a list of COVID education stimulus programs that might affect your school. It might not be comprehensive because there were a variety of different employment ones and so forth that crossed over various sectors. But here is a list of some specific ones that were focused on education. So last May, if you remember, ESSER came out, the Elementary and Secondary School Emergency Relief Fund. Next in July was GEAR, Governor's Emergency Education Relief Grant Program. In May was the ECF, the emergency, this past May, the Emergency Connectivity Fund opened up through E-rate. guess these aren't in order. Last spring in April, we had the PPP, the first round of it opened up. And then in 2021, we had the second round, PPP 2, that's the Paycheck Protection Program loans. Then this spring, we had the Emergency Assistance for Non-Public Schools, commonly called EANS. And now when you speak with DPI, they're going to refer to it as EANS 1 and then EANS 2, because actually there's another EANS 2 is pending, and it'll be very similar to EANS 1, except no reimbursement model. So the details of that have not yet been revealed. More to come on that. Additionally, like I mentioned, there were a couple of programs related to employment, including the ERTC, or the Employee Retention Tax Credit, that I know a few schools sound like they might be able to utilize. So there's a wide variety of programs going on, lots of new things changing on the ground this last year. So let's just start by, Lori, if you wouldn't mind, could you just explain the basic difference between kind of the main programs, I would say, for the schools that they've probably been dealing with the most, are the ESSER and the GEAR, and then now EANS?
The most basic difference is that the EANS fund has the reimbursable component. So schools can get reimbursed for expenses they have incurred since the school shut down in March of 2020 through now, and also seek future reimbursements for some of the items that they'll be using. Allowable in only specific categories per the allowable expense summary spreadsheet on the EANS website. And the ESSER and GEAR funds actually come to an end for being able to be used on September 30th of 2022. And the EANS funds continue through September 30th of 2023. So we have another year to make use of those funds. Those are the basic differences: the reimbursable component that doesn't exist in ESSER or GEAR. And also to add that in all cases, all the expenses for these programs are not eligible expenses for choice purposes. So they are not allowable expenses that will feed into your expenses on your reserve schedule. And also take note that the EANS allowable expense spreadsheet was updated on Monday, just Monday, and it now includes a supply or equipment column for items that could be considered supply for actual items, and then tells you whether you'll have to have an inventory label on it or not. So that is helpful.
Excellent. Okay, so I am going to see here if I can share my screen real quick, just to make sure everybody's following this. So hopefully you can see now I pulled up one of the differences from EANS compared to ESSER and GEAR is that instead of being administered directly by the Department of Public Instruction in Madison, it's now being administered by CESA 6. And here is a picture of their website, the portal for resources, etc., through CESA 6. And then what Lori mentioned was on Monday, we got an email, hopefully everyone did, from DPI. Here is, I'm showing you the EANS page on the DPI website, and you'll see that allowable expenses are listed in general. And then as you scroll way down, and here's all the updates. If you can't find it in your email, you can reference them all here. And then way down towards the bottom is this detailed allowable expenses spreadsheet updated June 21st. So that spreadsheet is this, and this is going to be a super handy tool for you if you haven't already bookmarked it. DPI has gone through and listed all sorts of items and issues, and qualified, whether they come from which category, et cetera, to make it an eligible EANS expense. So I just want to direct your attention to that. And the email on Monday explained how they did just recently update it. That's what these yellow items are. So that's something you might want to bookmark. And again, you get to that through your DPI website that you're used to going to. For the Choice program, you can just type in EANS up here in the search bar, and that'll bring it to you. So those are some handy references. Okay, so one of the big points I just want to make sure that we make real clear is in that Monday email that went out from DPI, they explained this $5,000 threshold. Lori, do you want to explain that a little bit more clearly? What is that about?
That is the $5,000 threshold is the dollar amount that they're using to call it either a supply or equipment. But note, if you look on the spreadsheet, that does not mean you may not have to return it or have it title transferred at the end of the use period for the funds as of September 30th, 23. So the basic thing is that if you're purchasing a Chromebook or a laptop that's valued at under $5,000, it's now considered a supply versus equipment, but you may still have to inventory it and track it for purposes of this program.
Right. So my understanding with that is, in the email on Monday clarified some of the inventory tagging and so forth. And basically, as I thumbed through the items, it seemed like if it was paper towels, for instance, for cleaning, those consumable kinds of products, no, you don't have to inventory or label those kinds of things. That would be silly. However, at the end of the grant period in 2023, if for some reason you bought a truckload of paper towels, that those indeed would need to be handed over to CISA 6 because they could be potentially worth more than $5,000 and they weren't used if you had them sitting in your back lot. Would that be accurate?
That is accurate.
Okay.
And they, as CISA 6 has indicated earlier, they will be sending out a sheet for all of the schools to inventory what they do have in their possession each summer of the program. So they will have a list of what you've had and they'll be asking you if you've used it at the end. And I guess for an example on the spreadsheet, I'm looking right now at the Chromebooks, laptops, which I just pointed out as an example, is listed as a supply because it's under $5,000, but it's also says yes for the label required. So they, even though it's considered a supply, title may have to be transferred to your local education agency, your LEA, at the end of the eligible expense period for EANS funds, which is September 30th of 23.
Excellent. Okay. And in case you missed it, I think Lydia put in the chat the EANS allowable expenses spreadsheet link if you want to pop over to that quickly to reference it. Lori, thanks so much for that. Okay, so let's dive into the meat of this. I think the question that is on everyone's mind, and you alluded to it, is whether or not the school's expenses, their eligible education expense, is going to include things that would be covered by EANS funding. And that's really the pivotal question, as that would have an effect on a school's choice reserve. So let's dive into that. And Paul, if you wouldn't mind sharing your screen and walking us through some examples and understanding of what DPI's guidance is on the accounting for EANS.
Certainly. All right, hopefully is the PowerPoint showing on your screen now?
Yep, we're good.
Excellent, okay. All right, so kind of as has been mentioned on the EANS funding, there are two options available basically for how the funding is going to work. There's the reimbursement model, so you can seek reimbursement for costs you've already incurred, basically beginning from March 13th of 2020 through now. Alternatively, you can request services or assistance, in which case then basically EANS is going to handle the processing of the transaction. You're essentially really not going to receive any direct funding from EANS and not pay any expenses on that directly. As Lori was mentioning, the cost for materials, equipment, property that are reimbursed by EANS or paid for by EANS are technically no longer the property of the private school, essentially for GAAP purposes. And for expenses reimbursed or paid for by EANS that cannot be included in the eligible education expenses in the reserve schedule. Overall, under the request for services or assistance guidance, basically if you're going that methodology for your activity under the EANS program, DPI is just recommending treating those similar to how you would for your title funds, and basically you would most likely just exclude those from your GAAP financial statements. Now you may potentially need to consider for in-kind, which Jason will discuss a little bit later. Under the reimbursement model, there's basically kind of two options you can really consider basically for how to do the accounting for these funds. The first one was option one here is basically what DPI had recommended initially. Essentially, your reimbursed expenses that you paid for basically either in the prior year or even in the current year, they would not be included in your GAAP financial statements. DPI was recommending restating the prior year financial statements to remove any of those costs from your statement of activities. And then any expenses in 2019 or 20 that were reimbursed by EANS would need to be shown on your reserve schedule in the adjustments to prior net eligible education expenses line item. That's line 19 below. As auditors, we did kind of take some exceptions to how this was being accounted for by DPI in this methodology, particularly with restating the prior year financial statements. It seems to be unnecessary. It's also not really consistent with GAAP. And so we discussed with DPI option 2 under the reimbursement model, which would be basically to recognize your EANS funding and expenses in your GAAP financial statements, just like you would any other cost reimbursement government grant that you may have. So you'd recognize expenses paid and reimbursed by EANS in your statement of activities, and then your EANS reimbursements would be recognized as government assistance revenue in your statement of activities as well. Our recommendation would be not to restate your prior year financial statements. Instead, you're just going to account for any changes in the effects of the EANS program in your current year financial statements. As a year end for June 30th, 2021, then if you're submitting a reimbursement or planning on submitting a reimbursement for costs through that date, you'd record a receivable for any amounts that you haven't been reimbursed for from EANS yet, and which I assume most of you you've not received anything from EANS thus far into this model. In which case, then the way this will get treated on the PSCP reserve schedule, because now you're including those expenses in your general expenses on the statement of activities, which is what the first line item on the reserve schedule is. You'll just show the EANS funding then as government assistance offsetting revenue on line 15 in the reserve schedule, and that way it'll net out to 0 essentially. Now there are some modifications you'll need to do if you've got items that were capitalized in the prior year, so you may need to either put items into an ineligible depreciation expense line item or modify your your balances again as well.
Okay, so for those of us non-accountants, I'm just going to boil it down. So my understanding is the bottom line is the eligible expenses will not include items or services reimbursed through EANS for the Choice program when you're calculating the reserve. And each audit firm has a choice of how they're going to handle this. There's 2 choices given by DPI, which you've walked us through, but the bottom line will be the same really for both of them in terms of the school's experience and the effect on their reserve. Is that correct?
That's correct, yes. Both either option 1 or option 2, you should arrive essentially at the exact same reserve at the final end of the year. So whether option is chosen doesn't really matter in regards to the reserve schedule. From a GAAP basis, overall, our feeling as auditors at least is that option 2 is more consistent with generally accepted accounting principles than option 1 is. So. Yeah,
so a follow-up question on this that I would throw out there is, how is this different than the way that we're going to be handling PPP that many schools received last spring?
The PPP funds are specifically exempted from government assistance by DPI under a waiver. That was, I think it was this past today actually. And that's why that's different than the EANS funding. They don't technically have a waiver for this. They are considering this essentially government assistance. And additionally, there's the additional stipulations within the EANS program that basically the actual ownership and title to basically items purchased with it actually belongs to EANS. It's meant to actually essentially be an assistance type that's separate from basically the general school government assistance would normally be.
Okay. And Jason, with these two methods that Paul's shown us, what about your firm? How is Riley Penner Benton approaching this? Which option are you choosing?
We are going to be choosing option 2 because we, along with Paul's firm, believe it is closer to following GAAP, which is a requirement of DPI's audit report. So that's the option we're going to suggest our clients follow.
Okay, and just again, for those non-auditors, GAAP is the generally accepted accounting principles. So walk us through a little bit, Jason, with the fixed asset concern, and if schools have items above that $5,000 threshold, that they're going to be needing to make an adjustment for because they were purchased and booked back prior to June 30th of 2020. What happens? I'm a little murky on how that works.
I guess there's one of two ways. You can just let it ride its course and let the depreciation expense roll out over the life of the asset. Or the other option that we're leaning towards is disposing of that fixed asset in 2020, 2021, and showing as a loss on disposal of fixed assets. So then they get the expenditure there for the offsetting component of the government assistance revenue side.
Okay, yeah, because anything of that size, capitalized expense, is going to need to have that title transferred to CISA 6, correct?
Correct.
So that disposal would, to me at least, would make some sense. I can see that. Okay, I can see a couple questions coming in, and we'll start to deal with some of those, and then we're going to lead into some helpful tips that our auditors can provide for schools. So get those questions ready. Let's see here, Lydia, what do we have to start with?
So I've just got a question that says, if a school would like to lock in rates for resource teachers for 2 school years, are there any ways to overcome the fact that EANS monies are only funded through September 30 of 2023?
Okay, Lori, you might be the best to try to answer this. I know you've done a lot of back and forth with CISA 6, and you've been on all of the seminars, webinars that they have provided. How would you answer this?
You can have the positions funded through September of 2023, and that is really it. Same thing for software, any other items that you're paying a subscription to over a long term, they will pay it through September 30th of 2023. So if you have a position, you're going to be able to have it through the next year and the year after that, as provided you have enough funds available in your allocation to pay for it. And then you'll be able to probably get them started in September of 23, but they will not pay for anything beyond that. And I haven't actually talked to them about having an employee that would be working that September of 23, but they're, and each CISA is working, I don't know how each CISA works with their positions. We personally are working with CISA 6, so I know more about the details of how they're working with their positions. And I haven't even asked that question. If we had an employee that would start in that year, the beginning of 23, what would their letter of employment look like? Because the ones that we're doing now are for a year at a time. So we're doing ones through August for the school year. So they're starting on August 1st and they're ending in the beginning of June next year.
And so Lori, let's back that up just a minute to make sure everybody online is clear with that process, because this is a common need, that a common expense that schools want to utilize funds to support staff, additional staff usually, to support learning loss, et cetera. You mentioned the CISA. So what are the steps that they would need to take if they want to hire someone?
The first thing that that we had to do was submit a direct service request because they're all funded through direct service. There's nothing reimbursable about any positions.
And that's on the CISA 6 website.
That's on the CISA 6 website. I am not sure if you do something different with, I think that you would probably, if you're going to use CISA 1 or CISA 2 or one of the other CISAs, you would contact them first and ask them what to do. As far as, I think you'd still have to submit it as a direct service, but you would be already working with a different CISA to fund your position.
Yeah, that's my understanding. So you would reach out first to whoever your local CISA is, and you can discuss it with them, and you would submit a direct service request that CISA 6 is going to have to end up approving. They will look at your allocation, make sure you have enough money, make sure your request makes sense in terms of the eligible categories being listed appropriately, et cetera. And then I believe, last I heard, they were working on developing kind of an MOU between the school and the CISA to have some clarity on various employment concerns. Have you heard anything more on that, whether or not that's done? Or
I have heard that, and I have heard that they're working on it, but that has been several weeks to more than a month at this point. And we haven't gotten any MOU or any draft of it. We do have a number of positions that are being funded by EANS funds, and it's all in the works. None of them will start working for us until into August. So there's still time for that.
yeah, and I think it might be different for every CISA.
It might be. I suspect it is based on the conversations I have. But again, since I'm only working with CISA 6 on that, I don't know the details of how the other CISAs are handling it. I do know that once we found somebody that we wanted to offer one of the positions to, it's taking, they communicate with them rather quickly, but it's taking some weeks to get all the paperwork filled out, simply because CISA 6 is overwhelmed with summer school and handling all of the things that schools need for that. So I think once that settles down, they'll move quickly with the others.
That makes sense. That makes sense. Okay, so I'm going to move on to another question, and then we'll go to our Q&A also. Jason, if you wouldn't mind addressing, I understand that there's also the chance that a school's auditor might ask them some questions related to in-kind expenses and revenues. Paul kind of alluded to that in his comments. So what's that all about? Is that just for EANS, or is it broader than that?
Yeah, we ask that question of all of our schools. And it's just, we usually generally ask the administrator, maybe the principal, or maybe the bookkeeper. And it's just as simple as, hey, has the school received any goods or services that we did not pay for? Whether if a parent came and dropped off a computer, laptops, etc. And we specifically have asked about title funding in the past, and we're going to include EANS requested services or assistance this year. And then we generally, if they say, yes, we have gotten these things, then we follow that up with another question going, would you have paid for these things if this funding was not otherwise available? And if they answer no to that question, nothing is done, no journal entries made, and no footnote disclosure. If they say yes, and then we deem the services to be a specialized skill, then we estimate the fair value, or they estimate the fair value of those services, and then we just book an in-kind expense and an in-kind revenue. And then, as Paul alluded to, anything in-kind in this, or any expenses related to EANS funding, is not choice eligible. So instead of the government assistance line on the reserve schedule, it goes on the in-kind line. So in theory, being offsetting revenue and reducing the total expense number to get down to your net eligible expenses.
Okay, thank you for that. So that's just really kind of a heads up for administrators if the auditor starts asking questions about that. Really, the in-kind, it's both the revenue and the expense. And so you as auditors are going to make note of that in the audit, but the bottom line really isn't adjusted. It's like with title funds, and schools have been used to this for years, where they've been getting teaching services and a variety of different things to help learners through their LEA and the title fund. But that doesn't, in the end, no matter how the auditor has booked it, it's not going to affect your eligible education expenses for the Choice program. Is that correct?
Correct.
Okay. And so one of the questions that's coming through is that if this money for EANS doesn't help our reserve, and the items purchased, for example, Chromebooks and tablets, would need to be returned at the end of the grant period, then what's the purpose of these funds? That's a good direct question. So who wants to try to chime in and answer that question? Is there value, I think is the question. What is the value of participating in the EANS program given those parameters with the Choice program?
I can answer that. The value is that you're hopefully able to fund positions or purchase supplies or purchase Chromebooks or tablets that will help your students for 2 years, help them address learning loss. The money is not actually meant to offset your operating budget, if you will. It's meant to enhance the services that you can provide to your students. And the Chromebooks or tablets may or may not have to be returned at the end of the period. They may be able to be transferred to another. The title would transfer to your LEA, your local educational agency, which means that they would take control of them and they would be owned by them from after September 30th of 2023. And the school would still be able to use them. And it's likely that if you're receiving title funds already, they will be able to transfer under one of those programs. So they won't necessarily be removed from your school, but the ownership of them will change.
So, and Lori, clarify for me, if that Chromebooks are not that expensive really, so they're not going to be more than $5,000. So wouldn't they indeed be categorized for the purposes of EANS as a supply, in which case that title transfer, I would think, as long as they've been using them, wouldn't come into play. Is that correct? I mean, yes, they have to inventory them.
That means that it could come into play.
Okay.
The transfer of title may happen. You still have to be able to account for them, which is why they're still being labeled by the inventory. When you read the email that came out on Monday, it talks about the equipment, which definitely will have to transfer. Anything $5,000 or greater will have to be transferred under a title program for the school to retain the use of them. But in the supply category, it talks about that being a possibility as well. So there's still questions on that, and we still have questions to ask. We think we need to ask them of DPI at this point. So I'm working with another person on gathering the list of questions that we should even ask about that, because we are concerned if the items transfer to the LEA, what that means for the schools. So we want to get that figured out now before we go down the road of purchasing many of those items.
So at a minimum, there are unanswered questions here. There's a little murkiness, but in the meantime, you have until 2023 to use these items to be fully refunded for them through EANS, as long as you have submitted your request and it meets the criteria for whether that's virtual learning, hybrid learning, something pandemic related with COVID. So there's value initially just in that, in recouping money that's been out the door and in getting your school access to that kind of equipment that you perhaps couldn't afford otherwise. I would throw out there too, another thought along those lines is, you know, a lot of our schools are not 100% funded by the voucher. They are funded largely by private pay, tuition, and subsidy from donations, et cetera. And so that, you know, plays into the reserve calculation in a little different fashion. And so for those schools, I mean, I would think one of the values for Chromebooks, for instance, those large purchases, is that with EANS, it's not just for choice students. It's for private schools. All students are eligible for this. And so you can use your allocation to get Chromebooks that would benefit all the kids in your school, not just the choice kids. Whereas the choice reserve, that concept is based on your choice voucher dollars only supporting the costs associated with the students in the choice program. So to me, that's a big difference for schools that are not all choice funded. One of the questions before we move on to another topic here was which title program would these items potentially be transferred to, 1 or 4? I don't think we have any of that kind of detail yet, do we?
What I know is that it's likely, hopefully to be, well, it's more likely to be 4 than anything else because 4 is the whole student title funds, and the other ones are restricted typically to title students. So Title IV is the one that we expect it to be able to be transferred under. So if you're getting Title IV funds, hopefully that will work.
Okay, and one last question, I think we kind of skipped here. Back to that deadline for EANS of September 30th, 2023. The question is, if a school is using EANS funding to buy curriculum and books and those kinds of things, the title of those assets, again, just to clarify, in September of 23, at the end of the grant period, those titles would be transferred over if it's greater than $5,000. And if it's a subscription, the school would need to take over the expense at that point. So I don't know if there's any more clarity on that with books.
On the spreadsheet, on the eligible expense spreadsheet, it talks about curriculum and it says it's treated as a supply. Then you have to inventory it if it's printed materials, which indicates to me that there's the potential that you'll have to transfer it or to another program or return it after September of 23. If
So
you
again,
have
that's
virtual,
what those items,
yeah,
that's
if
what
you
those
have
items you want to clarify.
yes, if you have subscription or virtual curriculum that you're using on your Chromebooks, that can't transfer. And we do have it. Our school has a situation where we're buying a curriculum and we're paying for 6 years of it. The EANS funding will cover it through September of 23, and we are paying the remainder of the subscription. But that will not transfer because it's virtual. It's technology based. There's nothing to transfer. So they're just paying for it through September of 23.
Paul, what about one of the questions that came in here is what if a school received both PPP loans, number 1 and number 2? Are they able to participate in EANS?
If I recall, if you received the PPP2 loan, you're not EANS eligible then.
That is correct. Yeah, that is correct. Let's see, what
Sorry.
about the cleaning equipment? There's one on cleaning.
Could cleaning equipment also be purchased through this grant, or is this only for educational? What happens if equipment breaks?
Good question. Lori, do you want to take that? Cleaning equipment? Whoops, I think you're muted.
Sorry. I believe it still covers electrostatic sprayers. It does not cover carpet cleaning. They just added, or floor scrubbers. They just added that to the changes. It does cover electrostatic sprayers. That is all that's included on the all that's included on the spreadsheet at this point. So you would have to ask. And you can certainly submit a question about a specific type of cleaning equipment to the EANS email, which is EANS@cisa6.org, and ask them, but there's nothing else listed on the spreadsheet at this point. And
I think too, it would depend, on what kind of equipment you're talking about and the cost point of it. If it's more than $5,000, if it's going to be capitalized, then no, it wouldn't. The supplies, on the other hand, for doing cleaning are generally an acceptable expense, right, Lori?
yes, typically. I can say that what I've been told in the past is that they're following the CDC guidelines. So if the CDC guidelines, which the CDC guidelines did not recommend carpet cleaning to mitigate the spread of COVID, that's why they're not covering it. So it's going to have to be something that is recommended or was recommended by the CDC. Well, is recommended now. The reimbursable items in the past also have some cutoff dates as to when you'll get reimbursed for something. If the CDC changed their guidelines, they won't cover a reimbursement for something that wasn't recommended after the date of the recommendation change. So it's a little bit complicated.
Okay, so I see again a question related in terms of the consumable books being covered by EANS. So if they're consumable, that's a little different than textbooks that you would be potentially keeping for years. So if your curriculum is a consumable material and you're purchasing it under an eligible expense for EANS, so it's not just any curriculum, it would have to be curriculum that you would be showing is to help with tutoring or learning loss or hybrid virtual learning, etc. Right, Lori?
Correct.
And then if it's consumable, you don't have to worry about that title piece, unless, like you said, it's a subscription that you're going to have to take over the monthly fee for at the end of the time. And then desk shields, are they covered for EANS for the 21-22 school year? My understanding on the list is that they are not any longer because they are similar to what Lori alluded to a moment ago, where when the CDC changes their guidelines, last spring, everybody was going out and buying plexiglass shields because that's what everyone was told to do. And then subsequently, the CDC changed their guidelines. So my understanding is if you purchased those kinds of items under that guidance last summer, for instance, then yes, you could get reimbursed for that. But moving forward now, ever since the CDC changed their position on shields, then they would no longer be eligible. Is that correct?
That is correct. It's listed on the spreadsheet as of March 19th, 2021, the CDC is no longer recommending the use of physical barriers in classrooms. So they will reimburse you for purchases made prior to March 19th, but starting on that day, if you purchased them after that, you will not be able to get reimbursed and you will no longer be able to get reimbursed.
And so a question in the chat is, once items are purchased, do receipts go to the local school district? And I'm not exactly sure of the meaning of the question, so we'll just walk it through. In terms of documentation for invoices that have been paid and so forth, you're definitely going to need to gather those if you're going to utilize EANS reimbursements. CISA 6 is going to need to see those paid invoices in order to qualify your eligible expense to be reimbursed. If, on the other hand, you're talking about at the time of the transfer of potential title transfer, that's a different matter in terms of invoices. I don't have an answer for that. We can reach out and try to find the answer, though, from CISA 6, but that would be the question that I would need to go to them for that. Let's get some helpful tips here while we still have a few minutes. So Jason, how about you? What would you recommend for your clients? Helpful tips in terms of dealing with EANS paperwork and the whole funding process. What's going to help with the audit that they're going to have this summer?
We would request if they're going the reimbursement route, you know, the list that they sound like they somewhat have to prepare for EANS to request reimbursement. We would just need a list of expenditures that they're requesting, and that would need to be through June 30th of 2021. So then we can book the receivable and the government grant to cover those expenditures. So, and then also too, if anything from March 13th of 2020 to 6/30 of 2020 is on that list and the school capitalized that as a fixed asset, that would be needed to be identified in that listing as well, so that we can properly dispose of that asset in the 2020-2021 school year.
Paul, would that be pretty similar to what you would recommend for your clients?
Yeah, that's exactly what we'd be recommending. We're preparing like probably a summary schedule, kind of similar to what does get submitted into the CISA system itself, basically for our schools, basically to kind of go through it, analyze what they've had for expenses, which year they were charged to, and then also probably even directly in there just to kind of consider them basically, okay, does any of this meet any of your in-kind requirements for recording? So, but always, and main thing always with the schools, just reach out to your auditors, obviously in advance, be sure to talk about this and get a handle on this before your audit field work starts later this summer or early fall. So want to get on top of this right away.
Yeah, now what about timing? Let's talk about this a little bit. So one of the questions I think that's kind of hanging out there, when I talked with CISA 6, there haven't been a huge number of reimbursements submitted yet. Schools are moving towards that. They're pulling together their documentation, I think, so forth, and they're trying to plan for those direct services that they are connecting with their local CISA on, et cetera. But these things take time, obviously, and the schools have been very busy as it is. So what's your thought? Should they just wait at this point and submit these requests after July 1st, particularly for reimbursements? Or no, that's not necessary. Do it ASAP. The sooner you do it, the sooner you get the money in the door. What are some implications of that decision process?
I would say the sooner the better, just in case if they don't accept that waiver for the EANS receivable or adjust their position on the cash and investment balance, especially if the dollar amount is significant. It doesn't hurt to have the cash in hand. Or if you know your audit is scheduled for end of July, early August, the sooner the better, versus if it's at the end of August, then if you want to make sure all your documentation crosses its T's and dots its I's, and you can wait a little bit longer to put that together. But it would be nice from an auditor standpoint if the subsequent receipt to support the receivable has been collected by the time we're out there doing the field work.
Okay, and on that topic, I do want to point out, I sent out a blast this morning to schools. Hopefully people have had a chance to see that. SCWA has advocated with DPI to get a special waiver or allowance for these EANS cash receivables. So if indeed you've submitted it now and CISA 6 hasn't been able to get that money turned around by June 30th, which would be likely, that cash, you've already obviously spent it in the past. It's already out your door. You're waiting to get it back. And yet the choice rules require that you maintain that cash balance in order to support your reserve. So it could be a double whammy, it seems like to me. So we have requested that they give a waiver for that. And the portion of your reserve that would be the cash receivable with an approved expense through EANS could get removed from that amount. So you don't have to have as much cash on hand. It would take that receivable into account. DPI has indicated that they are willing to work with us on that. I'm very pleased about that. And yesterday, SB 302, the waiver bill passed. We're waiting for the governor to sign it any day now, and that would give them the authority to move forward with that. So once that is clear, we will definitely send out information confirming that, but it is looking very positive for that. Until that's done, that would be another consideration, I would say, how that cash receivable is getting handled. Any other tips for schools? Lori, what are you doing to kind of get ready for this?
We've decided to, I guess I've decided for Messmer that we're going to get all of our reimbursement requests lined up. We've got a spreadsheet. You need the canceled check copy, and you need the invoice to prove, you need the canceled check copy for proof of payment and the invoice to prove that Messmer purchased it and not somebody else. And so we're getting that all lined up and ready to submit. And as soon as we have it all together and all orderly, and I know exactly the bottom line dollar total, we're going to go ahead and submit that, which I expect to be in the next week or two at the latest. So we're just trying to get ourselves organized. Somebody's going to sit down and do it all at once. Let's do a one shot. And we do have a significant number of reimbursable items, probably to the tune of about 30 to 50 different invoices at this point. So I want it all in order before we start submitting it. So I'm waiting. But I also want to make sure that we get it done before our auditors come in. So we hopefully get the approval so we know what the AR is, so we can just get it on our books before the auditors come in.
Excellent.
That is my plan.
Okay, so one of the questions that came in is said that if we've purchased something after the past reimbursement period, which, just to clarify, the past reimbursement period for EANS runs from March 13th, 2020 through June 1st of 2021. So if you've purchased something in that window of time, which is already passed now, the final date to claim that does extend to September 30th, because the question is, can we still submit it? And it's not a future reimbursement at that point. It's still a past reimbursement. It's past reimbursements cover anything from March 13th, 2020 through June 1st of 2021. And you are able to submit that paperwork and that request through the end of September this fall. Starting June 2nd, a few weeks ago, that's the period for what they call future reimbursements. And so anything from June 2nd through the end of the grant period, September of 2023, you need to get approval before you spend that money if you're going to be assured of getting reimbursed for that. So definitely reach out to CESA 6 about that if you haven't already made those purchases. Make sure that you've got your ducks in a row and it's an eligible expense and so forth. Any other thoughts on that to clarify that? Okay, last year, the cash reserve balance, the question says, was waived. Will this happen again for the fiscal year 2021? So this is what I was referencing earlier. Last year, we were able to get the entire cash balance waived in terms of maintaining that cash balance for the reserve. That requirement is in statute, and we got that waived because of the pandemic and all that was going on with that. This year, we do not have the entire thing waived. What we're working for, again, is the piece of your EANS reimbursement. So if you've submitted $100,000 of past reimbursements and CESA 6 hasn't had time to process all of that yet, you've been approved, but the money isn't back in your bank account yet, that 100,000 would be deducted from the amount of money you need to have on hand, the cash and investment balance, to support your choice reserve. So that piece of it, only that piece, the rest of your choice reserve would need to be in a cash or investment balance as of June 30th, like always. So let me know if you have other questions on that. Any other questions or comments by our panel? Helpful hints? Last thoughts? We've got just 2 minutes. I think so far the feedback I've gotten is that CISA 6 is really very helpful and does quick turnaround. I believe in the chat, Lydia put a little earlier their email address. Definitely feel free to reach out to them with any of these questions about reimbursements. The actual accounting of it, they're not going to be as versed in that. You're going to want to reach out to your individual accounting firm that does your choice audit, because again, DPI did give some options for how the auditors could handle it. And so you need to touch base with your auditor to make sure that you understand. That email again for CISA 6 is eans@cisa6.org. You're also welcome to always reach out to us here at School Choice Wisconsin, and you can do that at scw@parentchoice.org. So I think with that, we will probably end our session here. We're right at 3 o'clock. Thank you so much for spending time on this beautiful summer day with us. It will be recorded and hopefully we'll get that out to all of the participants by the end of the week. A big thank you to Lori and Jason and Paul for sharing your expertise with us. We really appreciate it. Have a good day, everyone.
Thank you for having us, Carol.
You're welcome.
Yeah, thank you, Carol.
Thank you, Carol.